You're watching the Blockchain Interviews, hosted by Dan Weiskopf. Each episode features interviews with leading industry experts so that viewers can have a deeper understanding of today's quickly evolving blockchain marketplace.
Today, we're here with Jonathan Solomon. I'm thrilled to have you in the Blockchain Interview series. Jonathan is the co-founder of DigitalMint, and a lot of people may be surprised that the kiosks exist to buy Bitcoin. I certainly was surprised in certain respects. Here I am in New York City, and I've got an app. But there are 4 or 5 different places where I can buy Bitcoin through kiosks. There are 26,000 kiosks now out there, and that's up from 4,000. This is really a growing opportunity. And Jonathan Solomon and his co-founder were early adopters in building out a very interesting business. And so, Jonathan, thanks for joining us in the Blockchain Interview series. I'm always loving to talk to entrepreneurs, particularly blockchain and crypto entrepreneurs.
Well, thank you very much for having me, Dan. I'm happy to be here and happy to tell my story and the story of DigitalMint today.
Yeah, you know what? Walk us through a little bit about your background. More about the company in general, and how you found your partner, by the way.
Sure. So we started the company back in 2014, and I have been taking a good long look at Bitcoin probably since 2009, 2010. My background, like a lot of people I find in the blockchain cryptocurrency space, is a little unorthodox. I'm an attorney by training. And I found myself, working in various startups in this space before we even started this company. So I was involved in the startup space. I moved to Chicago, and I knew I was interested in entrepreneurship. And I had this law degree I just completed, had to do something with it. So I joined a small boutique firm here in Chicago that was doing a lot of business startup work, entity formation, some light IP, intellectual property, copyrights, domain registration, help with that. And I found myself constantly helping other entrepreneurs start their businesses. And I really had this itch to start my own. Now, at the same time, I was really involved actually in the meetup scene here in Chicago. Maybe there's not so many of those happening right now due to COVID and all that, but at the time, that was a great way to meet other people who are interested in technology and things that you were interested in. And when I first moved to Chicago, I was thinking, okay, they've got a little bit more of a startup scene here than where I went to law school in Michigan, and coming from Buffalo, New York, which actually has come into its own now. But at the time, back in 2014, there wasn't a whole lot going on. And I went to a Bitcoin meetup, and it was about 9 individuals, and some of them, I think about a third of them, were there for less than above board reasons. They were interested in, maybe using Bitcoin for some of the shadier things that we heard about in the earlier days. There's also a couple of traders and a couple of technologists. But the one thing that all of us were there for, meeting in this mall food court in downtown Chicago, was we were there because we had this common interest of what the heck is Bitcoin? What the heck is this technology? When I first had discovered Bitcoin, I was healthily skeptical of it. I had some skepticism. To me, it sounded like video game money, World of Warcraft money, Second Life dollars. How could this be valuable to anyone in the real world? Until I went ahead and said, I'm going to purchase some Bitcoin. And in order to do that, I really realized the real power in this technology. That for the first time, we have this scarce digital asset that anyone can send and receive. They don't have to ask permission to do it, and you can transfer money instantly across the entire world, basically as easy as sending an email. And that really spoke to me. I had like the same kind of tingling feeling I had as a kid when I first got into computers, and I was trying to figure out how to get games to run on my own old MS-DOS system, installed Linux on my mom's computer when I was 14, really drove her crazy doing that. And that same kind of like passion about technology that I really had not maybe felt in a while when I sent my first Bitcoin transaction and received some. So fast forward a little bit, I really became obsessed with that during law school, and I wanted to do something with startups. So I started going to these Bitcoin meetups, and um, meeting some like-minded people. I found that, hey, there are people who are actually looking at ways to start businesses around this. I learned about a company called Coinbase. I became their customer, and eventually had reached out through Reddit and worked for them for a while. Um, and that was a really interesting experience because it just shows, the power of the internet. So here I was working at a law firm, also, transitioning, working at Coinbase full time, trying to knock on the doors of major retailers who never heard about Bitcoin. They're accepting all their payments at this point through credit cards, maybe a special process for accepting an ACH or a check if they could. And saying, I think your customers should be interested in Bitcoin. And that was a really uphill battle. It was hard at the time, at 2014, but nowadays there's hundreds of thousands of retailers that accept Bitcoin. So back to Chicago and the meetups. That first meetup was cool. I met some interesting folks, and I decided I'm going to keep doing this. I'm going to take charge. I'm going to organize meetups with other folks. I met some people who were somewhat established in the Bitcoin industry. There's a gentleman by the name of Andreas Antonopoulos. I encourage anyone to check out some of his recordings on YouTube. He does a great job explaining a lot of the fundamental basic concepts of A, how Bitcoin works, and B, why it's an important technological innovation in our time. And we actually ended up co-hosting a meetup, having Andreas as a speaker. And through this process of throwing meetups, I managed to convince a bar owner at the time to allow me to have a number of folks come in, and host this meetup. He wasn't sure we were going to have anybody there, but I said, I think I can fill your bar on a night that it's generally empty, and I can get 60 people to come in, and they're going to buy pizza and beer, and they had a bowling alley next door. They can go bowling and buy rounds of bowling with Bitcoin. And this was actually right before I started working at Coinbase. Might have helped me get a leg into there initially. But I set up a really simple application, coded most of it myself in Ruby on Rails, to allow a QR code to be displayed on my iPad. Show some, I could type in the amount that the waiter or waitress was going to charge somebody for their beer and pizza, and say, okay, you bought $20 worth of pizza. Type that in the iPad. I could show them a QR code, and then voila, the Bitcoin would be transferred from their wallet, and it was going actually into my wallet at the time. There was no business behind it, and I ended up paying cash for everybody's meals at the end of the night. And I kept the Bitcoin. And so essentially I acted as the payment processor back in 2014 for this bar, and to accept Bitcoin. And so it's an interesting story, because it was one of those events where I actually met my co-founder. And we loosely kept in touch in the early days. And I think this is why networking is so important, because the fact that I was able to run this event was probably some ammunition for me when I was talking to the folks at Coinbase in the early days, which we were talking through Reddit at first, right? I hadn't gotten to the HR screening or any other steps of the interview process. I was just DMing them on Reddit. Hey, check out this. Here's a tweet. Check out this event that we did. And I was able to leg that into a job where I was getting paid in Bitcoin to sell Coinbase's services to merchants. Later on during that time, my co-founder and I at DigitalMint had talked about, let's put a couple of Bitcoin ATMs around Chicago. Let's see, what that can do. I'd thrown the idea around Coinbase. I wasn't sure if that would get me in any kind of trouble there. I was all excited about my new job back in crypto in 2014, and everyone's like, no, that's a great hobby project. We're really excited for you. And I think that's actually one thing Coinbase has done right. Is you hear about the PayPal mafia. There's a bit of a Coinbase mafia out there. A lot of early employees who maybe learned the ropes or gained a lot of knowledge there and went on to start their own businesses, which is really cool. But anyway, fast forward to the end of 2014, and myself and Mark, my co-founder, had placed a couple of kiosks around Chicago. And, we were surprised to see how successful they were. Surprised because, just like you said, people really going to be buying Bitcoin from what looks like an ATM machine. Well, yeah, and they were, we put them in a technological center geared towards an underserved population on the south side of Chicago, and that machine proved wildly successful. And it was not, the same sorts of customers, that we thought we would be initially seeing. Our office was inside a tech incubator downtown, and it was all just very much the same demographic of individuals, white males in their 20s buying Bitcoin. Yet what we were seeing at the kiosk was a very different demographic. People of all different shapes, sizes, economic backgrounds, what have you, were interested in purchasing Bitcoin from us. And there was something to it, because there was a lot of activity. I had in the early days, I was almost concerned from a compliance standpoint, before I even knew what the whole compliance picture looked like. I'm talking really early. And a customer of ours had transacted, over $20,000, say, in a short period of time, maybe a month. He was a young African-American guy on the south side of Chicago, and I had to ask, what are you doing? And what are you purchasing with Bitcoin? He was a little hesitant at first, also because Bitcoin, one of the selling points is supposed to be, hey, this is pseudo anonymous currency. So this company that you just purchased Bitcoin from calling you up. But we went out for dinner and we chatted, and I learned about his business, where he was importing human hair from China, from India, and selling it to beauty shops around Chicago and beyond. And I had never even, I wasn't aware that this was a trade. My hair is pretty easy to deal with, so I'm not. I've never heard of this before. So this was really interesting, and it turns out it's a multi-million-dollar industry. And I said, so why Bitcoin? Why not use PayPal? Why not do a wire transfer? Well, he was a young guy and was somewhat distrustful of banks and their fees and their onboarding process and structure there. And the other part, though, is he goes, I honestly would have paid PayPal, but Bitcoin was what the seller overseas was demanding. And I dug into that a little bit. Well, why? Why is this vendor that you're using demanding Bitcoin? Well, it turns out the reason that the vendor was asking for Bitcoin was because of the instantaneous nature and the irreversibility that, not the individual I was talking about, but others, buying, they had done chargeback reversals, that these overseas vendors, they didn't have recourse to, call an American bank and say, hey, that transaction is valid. The bank is going to side with their American customer and be done with it. So after dealing with a number of chargebacks, Bitcoin just ended up, because of how quick and efficient it is to send, be the requested currency of the day there. And I encountered other situations like this too, where we were talking.
So Jonathan, sorry, I just want to interject. So you met your partner, you hit it off. Did your co-founders, do you have different roles?
Yeah. So I'm CEO. Mark Grenz, my co-founder, he's the president. And his background, he comes from the financial industry. He's worked at Schwab, Hightower Advisors. So he's got a very solid, financial asset management background. Myself, I've always been a technologist, tinkering with computers, dabbling with programming, although I wouldn't hold myself out as a full stack developer or anything like that. And with my legal background, so we kind of had this really nice yin and yang, where he was able to help a lot on the sales and financial side of things, and a pretty smart guy around technology too. We both had that technology aspect, and I was able to bring a lot of the legal and compliance, and we just have a different way of thinking about things, which it's nice. I know that some companies do well with two strong individuals leading, and some it's better to have just kind of one strong person. But I think ultimately it's great to have somebody to lean on, because building a company is really, really hard, and to have somebody with like very similar values to you and interested in building and creating something is great.
So two young guys got together. Fast forward, you have like what, 35, 36 employees?
Actually, we're just about to hit 50 now.
So
So
Fantastic.
we started off with, it was just the two of us in a little room in a tech incubator. And, now we've got, 50 employees all around the country. Really, we've got some remote, majority are in Chicago here, but, we've really built, continue to build a financial institution.
Talk to us a little bit about where your kiosks are located geographically.
Sure. So, one of the things we realized when we were looking at our customers and the use cases is, what you're using this for payments, you're using this as a store of value. Why? And a lot of our customers, they felt disenfranchised by the current financial system. Either there was not geographic access, or banks were inconvenient, or they felt screwed over by a bank before. Banks have collected hundreds of billions of dollars every year in fees, whether that's interest, overdraft fees, what have you. There might even be a fee, you don't have enough money in your bank account, so someone is essentially, your bank is punishing you for being poor, and they're going to take more money and
Right.
and make your situation even worse. So we found that, where else do these individuals who are transacting with Bitcoin, what else, what other aspects of their financial lives can we learn about? We learned that a lot of them conduct transactions in check cashing stores, currency exchanges, financial service centers, what have you. And these stores play a really important role, because they fill in what are called financial deserts. You hear about, Whole Foods going into underserved neighborhoods because there's the existence of food deserts, and that's a good thing, to provide services to people who are not currently being served well by whatever system, whether it's the food supply chain or financial system, right? And so we made connections. Chicago is actually a kind of a mecca for the currency exchange, check cashing, financial service center industry. And we walked into one of our partners, who we still continue to work with to this day, in their office, and say, hey, we want to let us put a Bitcoin ATM in your lobby. And it took a while to even get their attention at first, because we had left a few messages, sent a few emails, and one of the principals there said to me, why the heck would our customers want to buy Bitcoin? They're living, some of them are living paycheck to paycheck, or they're doing all their payments through, they're coming in to pay their electric bill, to pay their phone bill. They're not really investing. Why would they buy Bitcoin? And I said, just bear with us. Let's do an experiment and put one of our kiosks in your lobby and see what happens. And they were astounded, because a couple of weeks later they said, oh my gosh, your customers are our customers. And we started to hear stories of individuals who would go and they would, cash a check, or maybe they had cash from, whatever job they had, they were getting paid in cash. And they were going up to the counter, cashing the check, then walking straight over to the Bitcoin ATM and putting that cash into there, and putting it into their own wallet, maybe sending it, to a different wallet. And there was some really, really savvy individuals too. And this is a legitimate activity. This is a savings account for some people. Now, there's a lot of criticism out there. Well, you don't want to use Bitcoin as a long-term, store of value because of the volatility aspect. But overall, in a long enough time frame, it's continued to go up. And I'd like to think most of these individuals, they weren't only in Bitcoin, but this was just one financial product that they had never really had access to before. They weren't investing in stocks and bonds, and now for the first time, some of these folks were having the ability to invest and use Bitcoin as that tool for investment.
So Jonathan, a long time ago, when I did my master's thesis on pawn shops, you've heard me tell this story. The average transaction was like $70, right, at a pawn shop. But your average transaction is what?
It varies month to month. I think between $250 to $500, depending on the time of year.
And are we looking at similar demographic?
As when we as the pawn shop demographic, yeah, I think that we talk about alternative financial systems. The FDIC, Federal Reserve, there's studies out there that say between 5 and 20%, depending on the metric you use, are unbanked, underbanked. But let's just say underserved, right? Folks who for some reason the dominant banking things that we might use in our daily lives, people in the financial services industry, are there's a whole another financial system out there where it doesn't make sense to have an American Express card. It doesn't make sense to have an account at a major bank. And one of the reasons is because of those fees I talked about, right? That, someone's reaching into your pocket and saying, yo, you dropped below $500. Well, we're going to take out a fee there. And so our customers are seeking out, this as a way of saving, as a way for paying for things, as a way for sending money across the world to individuals, as a way for, as a form of entertainment too. And it's really, what we've discovered, just like the pawn shop, is that this is where people are living their daily financial lives. I mean, not many of us walk into a bank branch as much as probably we used to 10 years ago. But there are areas that don't even have bank branches. And so what they might have is a check cashing store. They might have a pawn shop. They might have a payday lending store. And these have become de facto banks. I mean, I've heard stories of customers who said they'd rather go to a check cashing store and deposit their funds because at least it'll be available they'll get the cash right there. They can use that cash, where I go and deposit a check from Uncle Joey, and my bank, his bank, until they work it out, I might not have that $300 for 3 or 4 days. So there's also this instantaneous aspect of like immediate access to your funds.
Now, are your kiosks concentrated in any particular state?
We have, quite a few in the Midwest and Illinois, but we're actually all over the country now. We're in 38 states. We have about just over 1,000 locations. About half of them are kiosks, and the other half of those are either we have a direct integration into a point of sale system. So a customer comes in and just talks to the store employee like as if they're buying a gift card or a lottery ticket or anything else in the store. And we're just an option for the employee to click on their screen and say, hey, sell this guy, this woman Bitcoin. Or we also have another product where, a store might not have a point of sale system that's sophisticated enough. And we will give them an iPad that has our proprietary software on it. And that iPad will allow them to, act as our agent, much as someone could be an agent of Western Union or an agent of MoneyGram, RIA. Those traditional money transfer services, well, it's really legally and through the regulatory lens, the same thing. Your store is becoming our agent. We're giving you an iPad or an integration into your point of sale system, and now you can sell cryptocurrency with DigitalMint.
Interesting. And your legal background, I'm sure, helped you out with the regulations, right? Because your industry, like my industry, like the pawn shop industry, are highly regulated. Talk to us a little about that.
Heavily regulated. Yeah, I will say it definitely gave me a leg up in reading and understanding. I studied a lot of administrative law when I was in law school. And so, but what that allowed me to do is take a look at these statutes, talk to regulators, talk to experts, and at least ask the right questions, or even be able to find people who are smarter or more knowledgeable than me and get them in the room to ask some of those questions. I think that's, really important as a leader of a company, that you could recognize to put people in the room smarter than you to help you get things done. And it definitely, the legal background helped there, but the regulatory landscape is, some refer to it as a Wild West. I'll say, there's maybe some aspect in the sense that this is a new technology and regulators are still trying to grasp it. There's some truth to that term, but my industry has been regulated on the federal level since 2013. FinCEN came out with guidance in 2013. Jennifer Shasky-Calvary was the head of FinCEN at the time during the Obama administration, and said, this is money transmission. This is money service business activity if you're buying and selling Bitcoin for US dollars or vice versa. And that at least, allowed us to narrow the scope and say, okay, what rules do we have to comply with? Well, it turns out it's a lot of the same rules that a Western Union or a MoneyGram or any other money transmitter type business would have to comply. And they've just been kind of bolted onto this new technology in somewhat awkward way, but also manageable. And so, part of that is, establishing a compliance program, and important part of that is knowing your customer. Just, everyone in finance knows KYC. Do you know who you're dealing with? Do you have controls in place to ensure that, that you're not sending money to money launderers, terrorists, criminals, that you've got controls in place for criminal activity? And that was really important to us early on. So we knew that we were, federally regulated, and part of that also is every state has its own set of regulations as well. And most states will have a money transmitter statute on the books. And it's been interesting throughout our business. We've been around since 2014. So during that time, we've seen states take different positions. New York, you mentioned, they've got their own bit license regime. So it's not even the money transmitter statute. They've built their own specific virtual currency regime around that, where some states have said, no, we're going to bolt on our existing money transmission. We're going to call this money transmission like the federal government has. But what that means is, okay, we have regulators on the federal level, and we also have regulators on each state level. And some states, you might even look at the statute, right, and say, okay, Texas calls us this, and this other state has the same language as Texas, but Texas calls us X and they call us Y. And there's no reason except that's just a decision somebody made in an office somewhere. But that's fine. Part of what we've gotten good at is learning to have the conversations with regulators and say, what do we need to do business in your state? We've also stuck predominantly with Bitcoin, selling Bitcoin. We do sell Litecoin in a handful of locations, and we're turning on some other products. But once you step into some of the other tokens that are out there, you start to implicate the SEC. You might implicate the CFTC. The CFPB has raised their hand and said they want a hand in regulating. And so I think, in the future, we're going to see, I think that one of the themes of 2022 that we'll see is that a lot of the regulators will be sort of fighting over, regulating our space a bit more. And, we've got our sleeves rolled up to handle that. But right now we have a really clear picture of who regulates us today and how to handle that. And, some of the concerns we're seeing out there, we're not anti-regulation. I think that there's a ton of fraud in our industry. Cryptocurrency, Bitcoin, it's a very powerful tool. You can send an amount of value across the planet instantly. And part of what makes that so powerful is also irreversible. That also makes it dangerous to some folks. There's a lot of those scams. I'm sure we've all gotten it, where you get a text message or a phone call and it's the IRS or the Social Security Administration. And if you don't, go to a crypto kiosk and buy your life savings in Bitcoin and send it right away, we're going to put you in jail. And of course, that's not the IRS, that's not the government on the other end, but there are some vulnerable individuals who fall for that kind of thing. And so, where we want to see the regulation focused is, how do we stop people from getting defrauded by this technology? We're really big fans of it. We think it's very powerful, but we want to keep our community of customers safe as well.
Yeah. Smart regulation is what we're all hoping for. And
For sure.
Okay, so in a short manner, tell us what the benefit is to buying Bitcoin on a kiosk over just simply an app.
Sure. Well, I think one of the biggest things, just like the reason that any of us would use an ATM, right? Often our kiosks are compared to ATM machines, even though you're putting cash in our system and getting crypto out, where traditional ATMs work the other way, where you've got some digital form of cash and your online bank balance and you're getting cash out of the machine, right? But the benefit of going with us versus one of the online platforms is really the instantaneous nature of you. We might not even know who you are. You could be a brand new customer, but we can do the KYC aspect, the things our regulators hold us to. We can verify your identity. We can ensure that that we can take a look at the address that you presented to our system and make sure that it's not fraudulent and or connected to legal activity. A lot of folks don't know that that's the case. So we can keep you safe, and we can verify the ID. We can get your Bitcoin address, and we can transact within a matter of minutes. All of this can happen within 5-10 minutes. The part where the customer's in front of the screen really only lasts 2 minutes, right? So all of a sudden that cryptocurrency is in your wallet, ready to be used in a matter of minutes. Other ways of going about this that require that you might have a bank account. So if you're trying to buy Bitcoin and not use a kiosk to do so, or not use one of our cash to Bitcoin locations, you're going to have to sign up for a service. They might be able to verify your ID right away, but they're still relying on the legacy banking rails like ACH or maybe wire transfer. Those things take time, right? A wire, maybe you can do it same day, next day. ACH, some banks, depending, can do same days, some won't, but there's a waiting period. And part of that too is the fraud risk, because if I'm at a computer signing up for an account, you don't know that I'm not, somebody I'm, in some other country who doesn't look like me and speaks a different language is trying to defraud me. And so a lot of times companies in this space who are dealing with bank transfers, they have to wait to make sure that that bank transfer won't be reversed. We've got a customer's cash in a metal drawer or metal box, so we can be confident that there's not going to be a chargeback that's connected to some kind of fraud. So we can release the customer's coin, pretty much immediately. And that's really powerful to folks. If you're if you're paying a vendor overseas, for example, or you're paying a developer and waiting for them to push your code to the app store. A lot of people work with, developers overseas who might not have access to the US banking system. They may be demanding cryptocurrency as a form of payment, and they're not going to push your code live till today or until they get paid. And if you want that to happen today, we're often, the best option, because we can do these things instantaneously. And we can verify your identity. We can make sure you're not getting defrauded, same day. These don't take, a 3 or 4 days or a week like it does on many other platforms out there.
So you use the greenback to transfer instantaneously, and you can't do that on an app. People forget that, right?
Yeah,
yes.
I can't insert a dollar bill into my phone.
No. Now, on the other side, there's a benefit to the business, right? It's not a lot of square footage. It's not a lot of man hours. It's all about the convenience, and it's a little extra margin, right?
Yeah, exactly. Well, should I hire you for my sales team, Dan? But yeah, that's really, a lot of it is, you pointed it out perfectly, is that, we need 3 square foot of space for a kiosk if it's a store. Or if we're going to put it behind the counter, then we don't need any space at all. We just need a drawer for you to put our iPad in, or use your existing point of sale system. We just become an app on your existing software. And then maybe we need a few minutes of your employees' time when someone comes in to buy Bitcoin. And most stores that we talk to don't mind that, because what that enables is more foot traffic, right? You're attracting people to your store who might otherwise be in there. So they come in and they come in to buy Bitcoin, and they walk out with, a Gatorade and beef jerky or something. So, and that sale might not have happened if it wasn't for us bringing the customer in. So, it's additional foot traffic. And, of course, there's a revenue share aspect to it too. So we have stores who are making hundreds of dollars a month, if not more, just by virtue of placing a kiosk in their corner or connecting us with their point of sale systems.
So if there are 26,000 kiosks today, and there were 4,000 last year, where are we going to be in 2022 or 2023, et cetera? Give us like some high level hopes and dreams for your sector.
Well, so we would like to be anywhere where someone is handing cash over a counter and can purchase a financial product, but anywhere that could sell a gift card, essentially, we want to be able to sell Bitcoin. And that's sort of our long-term plan, is be an on-ramp essentially for folks to take their paper money and get it into cryptocurrency. And by the way, we also offer some online services as well, but just to focus on that aspect, right now there's I think you said 26 or 29,000 locations around the country where someone can use one of these kiosks. When we have over 1,000 now of that market. When we started our company, there were barely 1,000 around the entire country back in 2014. So, there's a lot more competition. There's a lot more places to do. There's other options too. We see other companies getting involved and using slightly different models. They're not using cash, they're using debit card. And that's okay. When I talk to store owners, essentially they want their customers to be able to, pay with whatever they have, whether it's a check, whether it's a credit card, as long as the store is getting that value. They don't really care what their customers walking in. They just want revenue. They just want transactions. So, we would like to be anywhere cash to X, and not just Bitcoin too. If you have cash, or you have some other value of currency, and you want to convert it to Bitcoin, you want to convert it to a gift card, you want to convert it to a bill payment, you want to convert it to Ethereum, or heck, say an NFT. We want to be the company that helps you do that. And we're doing it in our own very compliant way, to make sure that the industries that we work with, because we work predominantly with financial service stores, check cashers. We work with, on the back end with a lot of banks who are very conservative, as many banks are, but especially in the money services business industry, to make sure that, they know and our regulators know that we're following the rules and that we're doing it the right way. And we haven't expanded maybe as quickly into some markets because we've taken a measured approach and a very conservative approach. And I think that will reward us in the long run, because, there have been things we've said. I think success is just as much about things you've said no to as things you've said yes to. And there's been some things that have come our way that, maybe we could have gotten into, and we're glad that we stayed away from a certain cryptocurrency or certain product or a certain deal. And so, slow and steady wins the race. And, we're happy with our current growth, but would love to continue to do that and be involved in every cash financial transaction that happens.
Well, wait, are you a former lawyer, or you're still a lawyer, by the way?
Recovering lawyer, I think.
Recovering lawyer. Growing appropriately, and making sure you don't stumble on KYC issues is the only way to go about, this industry, right? Because you're dealing with a situation where the business is hosting the kiosks are kind of collaborators, right? In partners, whatever you want to call it, right? If you did it wrong, there would be huge ramifications. So I totally respect where you're coming from. So I always kind of conclude these with two wild card questions. Okay. And you've been in the industry for so long on a relative basis, right? Which industries do you think will be most disrupted by cryptocurrency, besides financial services, because that's too much of a layup?
For sure. Yeah. Well, I think that I'm seeing right now, I predict real estate in a couple of different ways, and also entertainment. And I see real estate being the concept of an NFT, right? Everybody's talking about NFTs right now. And I'm not talking about the ones Snoop Dogg or Martha Stewart are advertising on their Twitter feeds, right? I'm talking about just the idea of a unique transaction on a blockchain that represents something real, and maybe that represents a real estate transaction. So I think the whole idea of, title insurance companies are going to start to realize that, keeping records on paper or centralized databases is a old legacy way of doing things, and there's efficiencies by doing things in a decentralized way, where your home purchase, your title to your home might be represented by an NFT, the title to your car even. Title to go to luxury goods. But also I think you're going to see, because of the amount of wealth that's been created already in Bitcoin and cryptocurrency, and the number of investment that it's created, a lot of wealthy entrepreneurs who have cryptocurrency and are, they need a place to live, or they're looking for other ways to invest that. They don't want to be 100% all in crypto. And so you're going to see some innovative ways to invest in real estate, using crypto assets, with perhaps tax advantages and other advantages there that financial advisors would traditionally talk about. And then entertainment is another thing too. And I think that right now there's a lot being said about NFTs. And at the end of the day, I think that NFTs will still be around 5 years from now, but we won't be so fascinated. They won't be so cool to us. It's essentially, you buy something, you get a receipt. That receipt's an NFT, big deal, right? You buy something digital or physical, and you'll have some sort of blockchain receipt. And so I think that, there's a lot of power in this technology, and, to see the way it's going to develop in a way where it becomes more and more mainstream, and it's less of this exotic thing that we're fascinated by, and more of something that becomes part of our everyday financial and daily living. That's where things are heading. And we're seeking ways to be a part of it. I'm not, there's a lot of buzzwords out there, Web3 and blockchain versus Bitcoin. And at the end of the day, we're focused on, what do our customers want, right? If our customers want a way to purchase digital entertainment in the form of an NFT, or we're happy to accommodate that if that's what we're seeing. But we're also going to continue to provide the hard Bitcoin financial services that we've always done, and do it in a safe and secure way. And we recently, one thing I do want to say is we started crypto3c.org, which is a way for, we're trying to up the standards in our industry. We do KYC on all our customers. We're doing some, we're looking at the transactions and making sure that people aren't getting defrauded. And we're working with some other industry leaders to do that as well. We've actually developed a database now where anyone who has gotten, that feels they've been defrauded by in a cryptocurrency transaction can go and report that, so that we can share that database with other companies like us and use that data to keep customers safe, because the regulators are out there, right? And we've taken a very friendly approach with them. But there are some actors who are not listening and not caring. They're not doing the KYC, and we don't want the regulators to look at our industry and throw the baby out with the bathwater either. So what we're pushing for smart regulation, and at the end of the day, we just want to see people transacting these things, whether they're buying real estate, whether they're buying entertainment, placing bets, do it in a way that's safe and secure and not going to get them into any trouble.
So the other wild card question I like to ask is, looking forward 10 years from now, what are people going to say was so obvious that they should have done related to the blockchain or crypto that we should be thinking about today? It's a stumper. What can I tell you?
Yeah, that is well, because I think that there are things that were obvious to me, and not that I'm some scion or something, but there was, when I was working at Coinbase 8 or 9 years ago, and I was talking to major e-commerce sites, hey, you need to integrate Bitcoin as a payment method. Get lost. No one's gonna do that. Now it's like a standard Shopify integration, right? Almost any website that accepts Shopify, it's like, do you want to pay with crypto? Just click here. So I think it'll be something like that, where we're not using cryptocurrency for yet, but we will be. One thing that I think is interesting is even bandwidth, right? Wireless. There's a project out there. I own a very insignificant amount of their token called Helium, and it's essentially a Wi-Fi type 5G network that is funded by, you mine the token by providing an access point that other people can add. And it's proof of coverage instead of proof of work, like Bitcoin, where you have miners just grinding away on equations. You have, was your antenna on and pingable by the network, and were you able to provide coverage? Okay, well, now you have a token. And I think that sort of thing, everyone's web browser will just have a wallet in it, and will all be this big mesh network connected to each other, whether it's your VR headset or your phone. And all of these devices will talk to each other and exchange tokens. And if you're not using your phone, you could allow some of your battery life to mine some token and pay for turn off ads on a website in exchange for the token you have. So there's some interesting projects. The Brave web browser is doing something like that, where using resources that are just sitting idle, whether it's your computer, whether it's your Wi-Fi antenna, whether it's your cell phone battery or storage space, where you can give some of that to a peer-to-peer network and participate in an economy. It'll provide an additional source of income to folks that they might not even be thinking of right now.
You sparked a lot of thoughts right there. People can get involved in the gig economy without knowing it, of course, right? And
Mm-hmm.
whether it's Helium or something else, and then a company like Dish might actually lower its customer acquisition costs and please their customers by offering them the Helium token.
Yeah, again, they transmit information over wires and wireless, right? And so to be able to harness a network like that to continue to provide services to the world, and also give back to their customers, or even allow non-customers to participate. And there's at the end of the day, it's an exchange of goods and services, right? I might be able to run an antenna someplace where no one else has when I'm providing coverage, and I'm going to get paid for that. And then a company like Boost or Helium, the company behind it, they might use that antenna then to provide internet access or other services to folks. And by virtue of someone having an antenna as part of this peer-to-peer network, they're getting paid. They're getting a source of that revenue too. It's almost kind of similar to the way that we'll give a store a revenue share when we place a kiosk in there, but it's just, hey, it's an antenna, and it's less formal. There's no contract behind it. It's just a blockchain that's constantly your system's on, and you're getting paid. You're getting a piece of that revenue share. So I think democratizing those models, whether it's internet access, whether it's connectivity, whether it's financial services, we're going to see this technology, blockchain technology, at the center of that, really empowering people in ways that we're not even thinking of yet.
Yeah, I love that as a conclusion, right? Where the blockchain empowers people. It provides ways to become more free. All right. Thank you so much for your time today. We think entrepreneurs who block and tackle every day to participate in the blockchain are a lifeblood of our economy, and we thank what you do.
Thank you.
Thank you, Jonathan. Bye-bye.